How do tax lien certificates work? Well, welcome back. In this episode, I'll answer your question, how do tax lien certificates work? Now, my name is Ted Thomas. I've been involved in tax liens and tax deeds for the last 30 years. Now, the first 5 years or so, I did investments myself. Then people asked a lot of questions. Next thing you know, I was a teacher and a guide and ended up as a coach, and then I ended up teaching a lot of people how to do this business. Now, I discovered a little known business that's very, very lucrative, and it's tax lien certificates and tax deeds. Now, this business really helps the client, and it helps the community, and even helps the property owner. For example, if you're the client and you're doing this, you're going to earn high rates of interest on a tax lien certificate. So that's a nice thing to know. Now, when you buy a certificate, you're actually going to give money to the local government. So you're going to help the community, and the government will be able to pay its bills. But the property owner likes you too. Why? Because what you're doing is you're paying their taxes and they don't get thrown out of the property. So they allow the property owner to stay in the property or on the property until the tax lien expires. And I'll kind of go into those details as we go along. So when I discovered all this, I discovered that I could buy properties for 5, 10, 15, 20 cents on the dollar, and that was really great. But that was at tax deed sales. Now we're going to talk about tax lien certificates today. So you can buy tax lien certificates directly from the county government. Now there's 3,000 counties and about 1,400 municipalities in the United States. Now approximately half of them will sell tax lien certificates. So if you decide you want to buy one of those certificates, you're paying someone else's taxes. And what you do is you invest with the government, you're ultimately going to get a check back from the government. So that makes that a predictable, a certain, and secure investment. Now I'll have a lot more about those in a gift I have for you when I finish. So when I finish this video, there'll be a gift there for you, and it'll teach you the secrets of tax lien certificates and how to make the profits on tax deeds. It's kind of a mini course that I'm going to give you, and it's going to be my gift to you. Also, at the end of this video, I'll talk to you about how to avoid the big mistakes at tax defaulted auctions. I'll be right back. Okay, so this is a good place for you to get started. We're talking about how do tax lien certificates work. Well, to start out with, someone had to go into a default situation. So in the United States, all the properties have to pay taxes. So half of the counties say, all right, if you don't pay taxes, we'll issue a tax lien. The other half of the counties, they're pretty severe. They're going to go ahead and they're going to confiscate the property. One type of county is called tax lien certificate counties. The other counties sell tax deeds. That means they're going to confiscate the property. All right, now this is a secure investment if you're buying tax lien certificates. And I'm going to try to confine most of this to tax lien certificates right now, because if we stay with the tax liens, you'll get a good understanding of that. Now, nationwide, these counties have literally millions of tax lien certificates. So I'm in a studio today in Florida, and they have 67 counties here. And in the month of May and June, they will have 1 million tax lien certificates to sell. Now, why on earth would you want to buy a tax lien certificate? Well, I'll tell you, because if you do, you're going to get a big reward. The reward is this. Some states pay 16% interest on the certificate, others pay 18, others pay 24. You could earn all the way up to 36% on a tax lien certificate, depending upon which state. So tax lien certificates are a profitable, safe, secure investment that's very, very predictable. So this episode is all about how do tax lien certificates work. Now, I said it was safe. It's safe because you don't invest with me or a broker. You're going to invest directly with the government, and you're going to get your checks back from the government. So that local government is considered a trusted source. Now think about that. So now you don't have to worry about your money. You're going to give it to the government. The government's going to give it back to you. And if the people don't come in and pay their tax, well, you're going to end up with a property. And so let me explain that. So when you buy a tax lien certificate, you actually take control of the property. Now you don't kick the people out. You don't get possession. But you now control the property. It can't be sold. It can't be mortgaged. Nothing can happen to the property until such time as the tax lien certificate is paid. So 97, 95, 97% of the counties tell us you'll get your money. So you're going to get your money. So that means you'll get your money back and you'll get a nice rate of return. So that's a pretty good deal for you. When you can make outrageous interest rates like 16, 18, and 24%, you're doing quite well. That's a really, really good investment. So how would you make money? Well, let's say you invested $2,000 in a tax certificate and it stayed outstanding all year in a place like Arizona. Well, Arizona pays 16%. So that means your $2,000 would earn 16%. Now, what you could do is you could take the money and spend it if you want. You get your 2,000 back, you go spend it. But what some people do is they take the 2,000 and the interest and they reinvest it. So instead of investing 2,000, now they invest 2,320. And then they just keep doing that. In other words, they keep rolling the investment over. And it gets bigger and it gets bigger and it gets bigger. And if they're doing that in an IRA account, which I'll talk about on other videos on the channel, if you're doing an IRA account, you don't have to pay taxes as you grow. So you definitely want to do it in a pension plan or an IRA account. All right, so what would that equal after 20 years? Well, a $2,000 investment continuously rolled over at 16%. In a perfect world, that would be about $30,000. So that's pretty good on a $2,000 investment. So that's one of the advantages in tax certificate. The big advantage is the safety and security of your money. Now, if you want safety and security, you're going to be putting money in a bank, but the banks are lucky to pay you 1%. Now you're talking about 16% in Arizona, 18% in Florida, 24% in Iowa. You're kind of getting the idea. All right, now, if you're a new investor and you start investing, you want to be cautious. Now, tax lien certificates, there are going to be thousands of those certificates. I'm going to suggest to you that you don't buy a certificate where you haven't checked out what the property is, because you don't want to buy properties next to the railroad or next to a chicken farm or something like that. Why? Because maybe people are just getting rid of the property and giving up on it because they can't sell it. You do want to just learn a little bit about investments because you want to be able to take the investment and keep rolling it over and growing it. But there's always going to be plenty of tax lien certificates. So a lot of people haven't heard about the investment. You're in the right place now. You're starting to learn about it. Tax lien certificates are available in approximately half of the states in the United States. Same deal with tax deeds. They're available in about half of the state. So the states and counties either sell a tax lien certificate or they sell a tax deed, okay? So there's no hype about it. It's just a business that is very level like this. Now, I was previously in the distressed property business. I got out of that business because not only was this one more profitable, but it's more of a straight line. It doesn't have the up and down of regular real estate. So real estate goes up, up, up. Everybody thinks you're getting rich. Then it comes crashing back down. Everybody's crying the blues because they think they're going to lose the house to foreclosure. So the foreclosure market is another completely different market than this. Tax lien certificates are safe, stable. This is a good business. All right, so it doesn't matter where you want to buy. There's going to be half of the states selling the tax certificates. They'll be auctioned off. They're always auctioned at a public auction. Now, the public auction could be at the courthouse, for example, or it could be in a large room, or it actually could be online. So today, it's much different than years ago when I started. When I started, there was some real challenges. Why? Because you had to drive to the auction and go to the county and do whatever. Now you can do the majority of this, almost everything, online. If the county isn't online, just move to one that is. So the fundamentals of all this is that the local government, meaning the state, the legislature started out years ago, along with the counties, finding out people don't want to pay tax. Well, none of us want to pay tax. So what they did is they set up a process. The process simply said, the county will handle it. We'll give the treasurer power. The treasurer has the power not only to levy the tax, but to collect the tax. And if they can't collect it, they have the power to seize the property. In other words, confiscate it and resell it. And when they resell it at a tax deed auction. Today we're talking about how do tax lien certificates work. All right, so instead of selling it in a tax lien state, what they do is they issue a certificate. That means they're very benevolent. They just say, all right, the property owner didn't pay, so we'll auction a certificate, get money in to pay the tax, and give that property owner time to recover from sickness or recover from a job loss or whatever. In other words, get the money together to pay their taxes. So the tax lien certificate states and counties are relatively benevolent, and the property owner is not evicted. Not evicted. So you don't get the property immediately. What you get is a certificate. So these are certificates that pay high rates of interest, all right? Now, that's all in the state law, and the counties are just executing the state law. All right, is it ethical? Is it a business anybody can do? It's both of those. It's not only ethical and easy to do. You're going to help people in your community, you're going to help yourself, and you're going to help the property owner. Everybody's a winner on tax lien certificates. With tax deeds, the people lose their property, and then it's resold at auction for, generally speaking, somewhere very close to the back taxes. All right. So the first tax lien certificate that you buy will be a little complex as you learn how to do it. But once you've done one, you can do this for the rest of your life. This whole system has been around for 200 years. There's already 5,000 auctions taking place every year in 3,000 different counties. You can't give money to me. You're going to give money directly to the county. You're going to get your money back from the county when the people pay their taxes. All right. What happens if the people don't pay? Well, that's always a big concern. People say if they didn't pay the county, why would they pay me? And here's why they'll pay you. When you buy a tax certificate, the local government said, all right, you bought the certificate. If the property owner does not pay you, you end up with the property and we'll delete the mortgage. All right, now let me say that again. If you do not get paid on a tax certificate, you will get the property and the mortgage will be basically wiped out. In other words, they cleaned it off the property title and now you own a property with no mortgage and you paid the back taxes. So that's a really great deal. So if the taxes are only $2,000 or $5,000, you now own that property. So that's why I said, look before you leap. Don't just buy something, know what on earth you're buying. If you know what you're buying, then you'll know that you have value there. Now, this has been going on for decades. So the rule across the United States is this. Anybody that owns property must pay property tax. All right, the states don't have time to collect all that, but the local counties do. So all of the county treasurers are authorized to levy a tax, collect the tax, and if they can't collect it, they're either going to confiscate the property or they're going to issue a tax lien certificate. There's nothing new about this business. It's been around for 200 years. Now, if you own a property, you're allowed to do whatever you want with it. There are some rules locally, but basically you could rent it, you could have agriculture on it, you could grow timber on it, you could build a house on it, you could rent it, you can do everything that you want to do with the property, so you have freedom. However, if you want to keep the property, you have to pay the tax. So the rule is, we'll allow you to own property in the United States, but you have to pay your fair share of the property taxes. Now, what do they do with that money? That money on property taxes is what runs the local county. The local county needs money not only to pay the county employees, but they pay the police department and the sheriff. They're going to pay for the firefighters. They're going to pay for the schools. In other words, they got a lot of bills to pay. I won't go through all of them, but the list is a mile long. So they have a lot of bills to pay, and if they can't collect the money, then what they're going to have to do is they're going to have to confiscate the property and sell it so someone else will get on the property tax roll and pay those darn taxes. All right, now I'm about to finish up, but I'm going to do 2 questions before I go. Should you buy at the tax auction or should you wait till the auction is over and then buy it? Generally speaking, you want to go to the auction and buy tax lien certificates. However, if you don't want to go, you can wait till the auction's over and they'll sell the leftovers over the counter. In other words, you can go to the county and they'll sell you the tax lien. So some people don't like to go to the bidding. They'll go later and buy the tax lien after the auction. Okay, when you foreclose on that property, you're going to end up with a treasurer's deed, might be a sheriff's deed, might be a quitclaim deed, but you're going to get a deed to the property, and that'll allow you to do anything you want with it. You can resell it, you can fix it up, you can hold on to it. It's your property, you can hold on. All right, so I talked about 2 mistakes. All right, now the 2 mistakes that you want to avoid is, number 1, don't buy any property that you haven't seen. Why? What if there was a hurricane? What if it was next to a chicken farm? You would not want to own a property next to a chicken farm. It's going to stink. So you would not want. Why you wouldn't you want to own it? Because you're going to have trouble selling it. So it's going to make it a worthless property. All right. So the other mistake is you don't want to bid on any property, number 1, that you haven't seen, but number 2, that you haven't figured out the exit strategy. In other words, you need to know what you're going to sell it for before you buy. You don't want to say to yourself, I think I'll buy this and hope I can sell it high. No, you want to know what you can sell it for, and that'll control your bidding completely. Okay, so my name is Ted Thomas. Free gift for you below. Nice to meet you.